Hey Scott, thanks for the intro. Steve, my man, what is happening?
Well, it's happening. Monday's happening.
It is, and what a Monday it was. Today being the first office hours of March 4th. Welcome, everyone. Thanks for taking the time to come in and hear what we have to say. We know your time is valuable, so we're always appreciative. Before we get rolling here, let's just take care of the legal mumbo jumbo here. Pardon moi. There we go. Okay. So just want to make sure everyone in attendance is aware of the fact that all the things that we share, all the plays, all the technology is strictly for educational purposes only. Please don't misconstrue what we share with you as a solicitation to buy or sell securities or anything else for that matter. If you do need investment advice, what to buy, when to do it, all that good stuff, please seek out a registered investment advisor or another licensed individual like a Series 7 stockbroker, someone else in that type of financial universe that can help you out legally with that type of stuff. But we're just some guys here that like to trade, showcase our technology that we developed over, let's see, 2003, 2019, over a 16-year period, ladies and gentlemen. That's how long we've been evolving this technology. So I think that'll make the lawyers rest easy. For the newer people in the crowd, and I'm looking at the count right now, and we're definitely getting larger crowds, which tells me there's more than likely a larger portion of new people. So for you regulars, bear with us here while we tell the new guys and girls what we have built around the technology in the way of the community that is Trade Ideas. So what you're seeing right here are the 5 o'clock Eastern webinars listed out, with the exception of the one up top here, the Traders Room, hosted by Barry Anderson. I do know Barry's been working fast and furious getting a new, getting some new technology online to host the Trading Room. That's been going very well, so I don't know exactly when the full switchover is, but for those of you who have been in the room, you're going to have some new technology, and if you've never been in there before, now's a great time to get in there. One of the best things about the Trading Room, other than Barry himself, while he's in there showcasing his trading style, as well as the way he uses the TI technology. The next best thing under Barry is the price of $0.00. And if you've shopped around the web, looked at different types of trading rooms, you know that most of the ones that are worth their salt, and even some of the ones that are not worth their salt, are charging quite a pretty penny, whereas our charge is zero. So take advantage of that resource if you haven't been doing so. Now, what you see on the rest of the page here are the 5 o'clock Eastern webinars, Monday through Thursday. Of course, you get myself and Steve on Mondays. Steve's going to take the steering wheel tomorrow for the trade of the week, and Andy's going to ride shotgun with him. Hump day rolls around, something completely different. We bring in Dan and Brad, CEO and our CTO, always entertaining. Then Andy's going to round out the 5 o'clock Eastern webinars with the trading studio, and I'm going to ride shotgun with him. Of course, Friday rolls around and we do something a little bit different. It's the ever popular, ever growing in size Friday support webinar starting at 11 a.m. Eastern and typically going a full 2.5, 3 hours. So that is basically for anything TI related, whether it's a configuration issue, you've been having trouble with an alert, maybe it's brokerage plus questions. So kind of a free-for-all Friday, 11 a.m. to 2 p.m. Eastern. And the added benefit is you get myself, Steve, Andy, and Sean all in there putting our heads together to answer your questions. So if you haven't signed up for that one yet, go ahead and get on the docket. We also have 4 other weekly webinars that we call TI University. These were designed to replace the one-on-one training sessions. We would really like to continue to do those for people, but our client base is getting so large, it's just not real feasible. And that's where the TI Universities come in. Everything from beginning 101 up until advanced 401, Monday through Thursday, starting at 12 p.m. Eastern. So we do these in the appropriate order because you'll need the things that you learn in 101 to make sense out of 201, so forth and so on. So especially if you're brand new, don't wait to get in on these things. If you have work conflicts which prevent you from seeing these in real time, we've got them pre-recorded on our YouTube channel, Trade Ideas YouTube channel, so that you can watch pre-recorded versions of these as well if you don't have the time during the regular day. So all in all, 9 webinars a week to educate everybody in whatever capacity they need to be educated in. Next slide, we always like to point out how everyone is responding to the introduction of our AI systems. 2016 being the first year that we brought Holly 1.0 online. And since that point in time, we've had phenomenal user growth, as well as we've brought 2 additional AI modules online for a grand total of 3 AI modules. That's Holly 1.0, 2.0, and Holly Neo. So things are good, and we want to thank you guys for that subscriber growth. Now, on to the docket here. We've got crazy amounts of great examples today, mainly because of what we had with the market today and the range, right? We had a nice little downturn, a little bounce, didn't quite get all the way back up, but market covered a lot of ground here today, Steve, so I guess it's probably a good time to kick it over to you.
Sure.
And
the unicorns.
Take a look here at the major tracking ETFs.
Cool. All right, everybody. So we'll start with SPY like we normally do. And for me, the real story coming into today is this this large tree branch that we just kind of keep sneaking out on. And what was a notable action to me today, a couple things, starting on the daily. We at one point today had a big red candle, down to these levels down here. I mean, this thing was all red at one point, and what we were looking at that point was one of the biggest mother of an outside days, you would call it, outside day, meaning the top of the body of the candle is above Friday's high, yesterday's high, and the bottom of the body candle would have been below Friday's low. But we didn't get that. We got a stick save. Once again, we got this market that's, for lack of a better description, just a zombie market on a hell-bent on a march forward. But yeah, Andy and I and some of the other guys were talking this morning, and quite honestly, what this market really does need is some sort of a shower, that might maybe set up, a nice cup and handle that we've got here, because the march that we've had from being down at 20% bear market levels without a real significant pullback, some consolidations, minor shallow pullback, some consolidations. Clean that up before it gets too dirty looking. And what we had today was, back on Friday, we had a really nice lift-off candle that closed the day, moving higher off of this nice little pullback. I mean, I love these patterns, but what I don't love about those patterns is when they've been sneaking out on the branch for a really long time, playing musical chairs, just kind of waiting for that branch to snap. So what we got today, we didn't get a shower, we didn't get a bath. We got what Andy and I always laugh. We got a monkey bath, the kind of bath you take in an airport where you splash your face, maybe some water under your pits, and that's it. And I don't really fully feel like that was enough for the market to go into reset mode and create some new setups. Because I mean, let's face it, a lot of the individual charts out there look exactly like we had today. So I thought it was interesting that we drifted higher over the weekend. And, I'll get to the trade of the week in a second. It was basically looking for some sort of a reversal if we got it. And the first half of the day, it was looking like a pretty good call. But again, this zombie market just continues to charge forward. On Twitter, I made a couple of points this morning that said, if this area right here, if the gap up fails, we're going to lose the buyers today. And that did happen. We got a nice whoosh. And then I sent a secondary tweet out, which wasn't as prophetic, but I said right here on the bounce, I think this is where the sellers could come back in and establish some more momentum to the downside, but we didn't get that. And as Christopher is pointing out in the, the questions there, using that 10-period moving average kind of gave us a tale of two Qs, two crossroads this morning. It gave us the, we've lost the buyer's moment back up here, which for a good 2 hours worked. A lot of negativity, a lot of selling, a lot of red. And then we had a confirmation that the downward momentum had subsided. by a break above that moment here. This candle right there basically said the buyers are coming back in control. So we lost the control of the buyers here in my book, and in my book we found control of the buyers back. Now, one day is not really, I think, going to resolve what tried to happen today. There was a pretty good reversal midday, and look at this volume candle here as well, a little bit of an uptick in volume. Now, on the good side, that is a very healthy candle. We've talked about that a lot. A big downward bottoming tail, which is what you get when you have kind of a V bottom intraday as such. But Jamie's been around, I've been around a long time as well. You know, we still have to deal with the overnight market. And it wouldn't really surprise me if this overnight market kind of gaps back down and starts to put some pressure on again tomorrow. It's not really a emphatic call. It's just kind of what my gut is telling me. I don't think this is over. I think what happened today was a good midday sell-off with some good volume, but I don't think this move today was enough really to pull the battering ram back far enough to come back and assault these levels that we've been talking about forever. Zoom out and erase that. You know, this level in here is there's a lot of congestion. All we have to do is go back and again look at the congestion back here. This is not going to resolve like a hot knife going through butter. It's going to throw some fits and starts. And today I think was one of the first days that we did see the fits and starts that were thrown. So what I'm saying is I'm not completely encouraged for the bulls that that this reversal at the end of the day gets us out of the woods. I think we still need a good shower, not the monkey bath that transpired today. So you know, I could be wrong. We could go sideways for 2 weeks, and that sideways action for 2 weeks, you know, could do just as good as a kind of a cup and handle pullback. So again, that was our big deep trough. These are the kind of setups that beg for the cup and handle setup to allow us to pull back the battering ram and get back some momentum to assault these significant levels. If we just zoom out again just a little bit. Oops, I didn't mean to do that. What the hell's going on there? There we go. Zoom out just a little bit. There's a lot of stuff we got to work out up here. So I don't think it's going to happen one day, and I don't think today's candle is giving the all clear sign. Starting to look like a Jeff Mackey chart. Yeah, Jeff's good with his doodles. That guy's a frustrated artist for sure. Yeah, Jesse, there's still a bug on the 200-day. If it suddenly ends on your chart, you'll see me sometimes quickly flash back and reset the chart. There's still some bugs being worked out on the moving averages, so that's what the workaround that I usually do, and I think Jamie just replied to you as well. So let's look around a little bit. Again, decent looking candle, but I don't think today was enough. I really feel like we need another pullback, maybe back to at least test this 200-day, maybe even a little bit below. We'll see if we can get that. The second one is the NASDAQ, and it did not have as much downward momentum and has actually a nicer recovery candle as well. I mean, that's still looking pretty good. A little bit different in the NASDAQ because of these declining highs back here. It's the area of resistance and where the supply of sellers are going to come in are a bit more nebulous compared to this real strong level L markup again that we have right there in the SPY. The IWM, different tail, kind of ran its tail between its legs and closed back below the 200. So a lot of trouble for the small cap stocks, the IWM Russell 2000, to work itself through these technical challenges here today. And then lastly, the Dow was kind of the weakest of them all. Still above its 200, but a much bigger red body candle. Didn't have that bounce as much as the techs did at the end of the close today. So we'll see. Back to the spiders, you know, they did a really good job of once again reclaiming that I talk all the time about is, you know, keeping this 10-period moving average in play. And boy, they did it again today. They managed to, in my world, the closing price is the key. So today, they and the market in general managed to prop price back up above and closed above that 10-period moving average. But I'm going to say it again. If you got a lot of overnight exposure, guys, keep an eye on the futures. Not that there's anything you can do about it, but I wouldn't be surprised, as JC Peretz likes to say, you know, an overnight gap down is on the table. I think it could very well happen. And it's just kind of a gut feeling after 35,000 hours of watching this stuff. Which, by the way, Jamie, I calculated the other day, If you do this 40 hours a week, if you're looking at charts, that's about 160 hours a month, just under 2,000 hours a year. It takes about 5 years to get to that 10,000 hour level of staring at charts and watching price action.
And
I
that's
mean,
doing it all. That's doing it full time,
yeah, and
correct?
that's not even
Mm-hmm.
including homework and weekends.
Mm-hmm.
For those that are curious about the SDS is the reverse inverse tracking of the SPY and the trade of the week that went out this week. Talked about prepared mind, and there's a good chance that this, it might not trigger, but it did. But sometimes we have to go against the herd, and it just had that feeling. This was much more of a subjective call this week in the SDS, as it just kind of had that feeling like we were ready for one. So obviously in the morning things were looking pretty good, and I think it would have been nice to see a little bit more basing around that green level. But again, this is nothing more simpler than the inverse of the SPY. So what I want to just leave you with here on this SDS trade, we'll talk more about it tomorrow when we get another day's worth of data. But this is not intraday scalping, guys. This is swing trading. So the trade is triggered. The bottom red line down here on the trade ideas charts is you're out for the most part. So we're belted in, strapped in, and you just got to kind of let things unfold and let the elbows get thrown and respect the time frame that you're playing in. Obviously this one of the reasons I said it might not trigger is because that was a pretty good move to have to get back up to these levels today. Well, a lot of energy was expended, and this is not necessarily the way to day trade, but we're not day trading. We're using this entry right here at that level as a swing trading entry. So don't get upset that we closed back below this level. It could still slop around for a while, and matter of fact, if we check into the after hours, it looks like we're already giving a little bit back, not much, but a little bit. So keep your eye on the market tonight, futures that is. We could very well see a gap down tomorrow. I'm just not buying this shallow pullback, which obviously ran a few stops, broke down to about below 5-day low, but kicked it right back in with a stick save, to use a hockey term, right back to close above the rising 10 period. But I think enough damage was done today that a lot of people are looking at charts tonight and might be putting in some sell orders tomorrow and getting a little bit nervous. There might be some fund managers saying, well, that really wasn't fun. That was a nice recovery, but maybe we should start looking to trim or take profits on some of these things, because this area up here is just ripe for some profit taking for the people who did take some positions down here and don't want to suffer a possible pullback of a cup and handle type nature. That's really what I would like to see, a cup and handle type pullback. So that's really all I got, Jamie. Unless
Good
you want to
stuff,
add anything.
Steve. I like the elbows thrown quote, because Lord
Yeah,
knows lots of elbows being thrown in there, lots of hits to take, but hopefully after everything settles out, there's something left over. All
it's a
right.
swing trade time frame. If you just size your position sizing with enough size to allow the elbows to be thrown, you might find it's easier to sit some of these things through and be patient.
Absolutely. Good stuff, Steve. Thank you very much. I will take it back here. Well,
Right.
did I hit stop? There we go. Am I back?
Back to there we go. Yep.
Okay. Perfect. Okay, questions panel is cleared up. That's good. All right, so lots of stuff to talk about, ladies and gentlemen. As far as expectation goes, let's just take a look at the SPY. 15-minute candles. We had the gap up, and look what happened to the SPY here. Gee, this pattern looks eerily familiar, mainly because it's the one that I talk about ad nauseum. A simple range breakdown, and today is one of those days where this will happen on a lesser scale quite frequently, going up and going down. Excuse me. But today, very pronounced. One of those days where the overall market exhibits the pattern that I like to hunt, right? And we're going to talk about this pattern and the just multitude of short setups that occurred just in this exact fashion, maybe not in the exact order as what we see on the 15-minute intraday SPY here, but man, they were all over the place. I've nailed down about 5 or 6 that we'll take a look at, but you could just keep going and going and going and going. And what we're going to notice towards the end of the webinar when we go over these plays is they all look the same, right? So the SPY got the party started, but there were things breaking down this capacity before, during, and after the SPY had its break. So it was really just, I mean, the faster you could type today and sum up these trades and get them in, there was no shortage of downside today. But we're going to talk about Holly first because it was quite an interesting day for Holly as well on many different fronts, mainly because she was mainly long today. And, you know, look at the market action. We recouped a little bit, got back above the 10 period here, and as Steve was pointing out, we got the stick save. But being predominantly long today was probably not easy from a psychological standpoint for anybody sitting in the chair. So let's just look at some of the Holly stuff today. So first and foremost, focus the attention over here on the channel bar, all right? Holly 1, 2, and 3 all posting green. Risk on up here for Holly 1.0, risk off for 2.0, and then back to risk on for Neo. Doesn't surprise me a whole lot with Neo since it's the more aggressive of the trio. Did not mean to rhyme that, just happened. But the bottom line is this, exactly 7.74 points on 31 signals. Not too shabby, not a bad day for Holly. I mean, usually when she knocks it out of the park, she'll get up there to 10, 11, 12 point total. So seeing her come in just shy of 8 points, pretty darn impressive today. So plenty of risk on and risk off examples. Probably one of the best trades I've seen in a very long time when it comes to positive attributes, this PTE here. And we had a double signal on PTE as well as a double signal on JP here. So let's just take a look at those guys. And what we're going to be doing here is looking at the spread between risk off and risk on these stocks and just quickly illustrating how we could size up the chart based on when Holly is exiting and seeing if we could capture a little bit more than what Holly captured here. Basically anything between this spread here. So let's see, that was PTE 1241. The first signal for PTE was from Holly 1.0 here. Hold on, ladies and gentlemen, let me wet my whistle just a little bit. Okay, so PTE, first signal, and here we go right here. Blue arrow corresponding with the first signal here. This is the first signal on PTE from Holly 1.0. So what do we have here? We've got great statistical probability coming out of 1.0 from the quarterback strategy, complements configuration of Mr. Steve Gomez. So look at this, ladies and gentlemen. Right off the bat here, when we see this signal come up, my eyes immediately go to, well, there's my favorite pattern. It's a little late, but we've got the nice statistical probability behind it, right? And what do we see happening here? This is something that we see all the time. We sometimes get Holly trades that, boom, off to the races. That's always nice. Everybody is a fan of that, immediate gratification. But a lot of the time, some of the better trades take their sweet time. That's exactly what PTE did here, especially after the first entry signal that we got in this, we'll call it 11:15 bar Eastern time. What do we get? We get a little sideways action. Now, a lot of times, this is when Holly has been known to exit prematurely on a profit save or a reduced risk, which are two of the audibles that we give her. They give her the opportunity to get out of a winning trade or a losing trade early. The other three factors are the profit, target, the stop loss, and the timed hold. So what do we get here? We get a little sideways action. Always something to keep your eyes on for a pop to new highs. But not too long after that, we get Holly Neo giving a second entry way over here. Now I'm going to pop back onto the first one because, you know, before this part of the chart develops, we were only left with this part, and then Holly exiting on her timed exit right here and making a whopping 21 cents. So let's just pretend for a moment there was no second entry. Would it have been that hard of a call to go, you know what, I'm going to stick with my original stop. It's going sideways. I've seen this before. We got the 10 period coming into play here, which, you know, acting as that little trampoline as it comes down here and goes bounce, bounce, and kicks on up. So we've got statistical probability with potentiality here of a range break coming on down to here where I've drawn this other line right here. So is that what happened? Yes, it is. So we get a little sideways action hugging that entry line, which is common on a lot of plays. And then right here, waiting for that favorite pattern to materialize again, an excellent time to bolster the position or sit with what we have because positive things are going on. 10-period SMA acting as the guiding hand. We're getting a range break here, only to find out Holly calls it again from Neo on a second entry right here. So we have two statistically weighted entries. We've got a range break taking happening in between the first and second entry, and we've got not so bad volume on PTE, finishing the day at relative volume of 2.83. And most of the day, these smaller time frames were elevated above 100%. So a lot of positive factors lining up on this PTE trade with two signals from Holly and a range break in the middle. Okay, so you're going to be hard pressed to find a better trade than PTE today from Holly. And you know, whether it was this one generating about 8.31%, of course, the risk on profit that you're seeing here, 12.5%, a little less on the risk off. But once again, whether or not we decide to stay in a play when Holly gets out is all based on what's happening with the chart on the intraday basis, and are we comfortable with it? So this one was a very comfortable trade the whole way through. A lot of good things happening. So hopefully we had some people capitalize on the PTE today. Had plenty of room over here as it, you know, kept just crushing through these areas right here, and finally not quite to the top of that bar, but boy, a nice little run on PTE today. So a lot of good things going on there on PTE. Now we did have another double signal here. First we had JP signaled right here from Holly 1.0, and both of these were from Holly 1.0. This one was a duplicate down here, same time 10-13-49, coming from the quarterback strategy as well. But this reminded me of myself a lot, right? What do? We get statistical probability here, a little bit of energy expenditure leading up in the opening hour here. We get the buy signal from Holly. What happens? Get the just enough to get us out right here. Uncanny how, you know, this little red hammer, whoop, wick down just to the stop, and then boom, right back up again. Well, how many times have we been in a trade like this where we're like, just barely stop me out, you know, I'm going to take another stab at it. And that's exactly what Holly did today. She took another stab at this one, stop out on this one. Okay, fair enough. Another buy signal right here, and this is the one that caught. We see the 10 period coming into play again. Got a little bleedy down here, but nowhere didn't come down here and tickle the stop again. So what are we experiencing right here? Sideways movement, not necessarily a bad thing. We always like it when they go up, but once again, that sideways action. Once we get this sideways action, ebbing and flowing right around the entry line, once again, where do my eyes go again? Well, we got consolidation, always the potential that it's going to head higher. In this case, we're in it with Holly. Whether we decide to stay in it right here or do a little bit of the 50-50 methodology, yeah, I'm not really sure here. Market's a little iffy. We do have the market coming down. Don't care how long you've been in the chair. When you're in a position like this and we're seeing what we did in the SPY today, ain't easy. Trading is hard, right? But this is what happened in the long run. We get the sideways action, go back up here, pop these new highs, and once again, once you get used to being in these things and getting this sideways action, being comfortable sitting in the trade once Holly's getting out, then you did have a little opportunity here as this thing cracked through to bolster the position and get what you could for the rest of the run here. Once again, looking at your single stock window, this is where I go to for all my just quick volume metrics. Relative volume finished the day at 15.58, right? So once again, I always like to say it's not the holy grail volume, but it can be the great equalizer, right? Clearly, lots of buyers in JP today. Didn't really matter if the market was coming down or not. This one continued to move higher. So, based on market conditions today, to see these extreme percentage gains coming out of Holly today on some long plays, definitely a good sign. All right, so those are two great examples of risk on, taking a little bit more risk. This first occurrence of JP could have even been considered what we call a trade around. All right, just saw Holly get stopped out. See this little hammer, this little wick makes me comfortable taking along here, even if it wasn't a second Holly call, which we did have the added benefit of that today. All right, now we did have another really good example of risk on here coming from on support in ACA. So let's just see here. Why is my arrow not lining up here? Let me just switch my segment. There we go. Okay. Now this one a little bit different, nice little downturn back down to the lows of the day basically. And buyer stepping in, on support. Notice how we came all the way up, came right back down to this area right here on support. Boom, boom, boom. Nice little entry right here. And once again, what do we get? We got sideways action, hugging that entry line. Now on this one, sideways action, and this is only 30 minutes worth right here, 15-minute candles. But what does Holly do? Position's not moving the way that we anticipated. The longer she's in it and the longer it doesn't move that way, whether it's a long or a short, a lot of the times when we see consolidation, this is when we will see the profit save or the reduced risk come into play. Now, after you've been sitting in this trade for 30, 45 minutes or an hour and you're seeing this type of activity with these little wicks down here, got to say I like that type of action. What do we get? We get a nice little lift here. So staying in this one after seeing this action right here, not a big stretch. Putting a stop loss right below those wicks could have kept us in the trade. And if we wanted to play this game on this little range here, once we pop through, maybe you could have bolstered the position. A lot of that depends on maybe how well you were doing for the rest of the day and how good your calls have been playing out. But definitely, if you're more of an aggressive nature on this little 1, 2, 3, 4 hour and 15-minute consolidation, busting above those candle bodies or even the wicks up here, could have given us, the confidence to maybe tack on a little bit of shares here, especially once we see it get above that 10-period SMA there. So a nice spread of $1.16 between 0 and $1.16 there. And once again, remember, it's not about capturing all of this spread. That's a pipe dream, right? It's just like pegging the top on a long that you've been holding for X amount of time or pegging the bottom. Every once in a while, you're going to get that bottom fill or that top fill, but it's the exception and not the norm. The goal here is to make a little bit more, as much as you can, between risk off and risk on. Even if you would have made 20, 30 cents on this, that's capturing some of that spread between risk off and risk on. And we could talk about Bison. This would have been an example of monitoring one that got stopped out, when it went considerably past the stop out point here. But
that's a fun name to say.
Bison. Now it comes back down here to, these levels of the prior close, catches some bids here. A lot of the times when they get back up to the stop loss, there can be a little bit of action there between the stop loss and the original signal price, assuming you like what's going on here. And when I see these little wicks right here down to the moving average, that can give you the confidence to go, okay, I'll wait for this candle to close, buy it anywhere in here, use that wick as my exit, and that would have allowed you to take advantage of some of Holly's pain, because keep in mind, whether it's Holly's pain or whether it was a trader in the chat room that says, oh, I just got stopped out, or like in the old days with myself and Steve and Andy, taking advantage of an actual person's misfortune, it's all the same. The end result is the same. The only reason you knew about it is because somebody got stopped out. In this case, that somebody was Holly. All right, so let me just do a little time check here. We're doing all right, but we still got some good information to get through here. That's all I'm going to go over for risk on, risk off type today. But when we look at Holly's numbers today, decent performance, up 7.74 on 31 signals. But now let's play, let's play the game of I see Holly posting 7.74 on 31 signals, but if I did this in the real world, right, if I was taking all of Holly's trades, how would I have done today? And of course, everybody's on different commission schedules. So I'll just try to map out some kind of generic numbers here, and we can adjust accordingly. And I've kind of prepared those right here, all right? So 31 trades. First, we have to take into account slippage, right? And so I'm just using straight across the board, 5 cents of slippage for every entry, right? So we got 31 trades, we got 5 cents of slippage, that's $1.55. So that's the haircut right off the top. 7.474 gross minus $1.55 leaves us a little over 6 points on the table. All right. Now it all depends about your share size. You know, how many dollars are you allocating, or how many shares are you allocating to each and every position? Well, we could have done dollars. I just picked something nice and easy for math purposes here. Let's say we were doing 100 shares of every trade. So after we give it the slippage haircut, we're left with a little over 6 points on the table. And if we successfully executed 100 shares, we'd be up right about $600 on that total right there. 100 shares, 6 points, $600. But let's not forget about the fees, the commissions, the SEC fees, all that good stuff, which SEC fees aren't even listed here, so that's an additional tack on. And these are pretty low ball numbers, but you can adjust accordingly. If you're paying $2 per side, that's a $4 round turn. So on 31 trades, that's $124. But if you're at one of these big retail shops and you're paying $10 a round turn, well, you're looking at what, $248 at double that. So you could be pushing upwards of $300 if you're on one of the pricier commission structures. Now, after we back out commission, you're left with about $495 on 100 lots. Maybe that's a little bit too big, because on 31 trades, that would have required quite a bit of buying power, all right? So let's just cut it in half. If you're doing 50 lots, you'd net around about $186 or so. And, you know, that's, hold on, I got an unruly pet here has decided it wants to mess with me during my webinar. So let me tend to that, just like a child would do. Okay, so getting back on topic here. This is what we'd be looking at on 100 lots, roughly speaking. This is what we'd be looking at on 50 lots, about $186 if you successfully executed 50 lots, assuming about 5 cents of slippage on either side, and that's with $4 round turns. So this gives you an idea of realistic expectations, because it's easy to go, wow, Holly was up 7 points, you know, would have crushed it today. But when we bring in real world execution, slippage, and commissions, well, that's what we have to deal with, all right? And the reason I'm taking the time to do this now in the webinars is, well, we all know what's coming down the pipeline, and that is releasing the technology so that all of you can automate Holly if that's within your risk wheelhouse. Some of you will, some of you will continue to use it just like the enhanced ticker that we always, you know, refer to it as being. But for those of you who, you know, are contemplating doing full Holly automation, these are things that you need to start getting in the habit of calculating on a daily basis based on the gross net transaction numbers and gross profit numbers that Holly is putting out. Yes, Bill, when I'm talking about 100 lots, I'm just talking about shares. All right, so hopefully that makes sense to everybody. If I need to go over, you know, any more of these numbers, or if you're not clear about something, just let me know, but I think it's pretty straightforward. So, all right, moving right along, kind of coming full circle back to the tried and true range breaks, the turbo breaks down, keeping in mind that the market emulating the exact pattern that we look for. And, you know, for those of you who have downloaded the ebook that myself and Andy and Steve and Sean put together, This is right out of the ebook, The SPY Pattern Today. What do we have? 1, 2, 3, 4, 5. Hour and 15 minutes, an hour and a half, boom, this range is broken, and Katie bar the door. All right. There was no stopping here. There was no stopping here. It was just pretty much down to, the bottom of the range that was created over the past several weeks. What do we always say, Steve? The stocks go up in an escalator, and they like to take the express
Stairs
elevator
or stairs.
down. Yeah, or escalator, stairs, yeah.
You're getting old
Moving,
on me, Jamie, taking the
move,
escalator.
moving stairs, yeah. I like them automated stairs, son. Okay, so once the SPY broke down, I mean, it was just, these guys were all over the place. And, turbo breaks down is where I was finding all of these today. And for those of you, once we go over these patterns and you want to try these windows out, where's the best place to go? Channel 4. You'll find all the windows that I'm talking about here, as well as Sean, Andy, and Steve's favorite windows as well. The 4 of us, thus the name Channel 4. But let's take a look at some of these. And, we're only going to go over a couple today because there were just so many of them. All right. Number 1, square. All right. What do we get? We get the opening bar. We get a little congestion right here, up and down, crack. As soon as that guy cracks, just off to the races. So a really good entry signal in square. We got risk right here. We got our reward area considerably a bit bigger here. The risk I'm marking up here because if this is the entry bar where we take the signal, looking at the prior 15-minute candle high is a reasonable risk area up there. And of course you can see didn't even really throw an elbow whatsoever, just off to the races. Weird thing about square, I don't know if any of you heard this, but I think it was on the 2nd last week, the co-founder of Square died, only 35 years old. I don't know if that has anything to do with the stock going down, but I found that very odd. ZS, more of the same. 1, 2, 3, 4, 5. That fifth 15-minute candle breaks this level right here. Off to the races. Now notice as we go through these guys, they all look pretty much the same. All right. Some might be a little tighter than the others. Some might be a little bit more stretched out, but the action is the same. Kind of going back to the, well, some might call it conspiracy. The same algos run the markets. It sure seemed that way today based on the way these patterns are playing out. Lululemon, the darling of sports attire.
Can I tell you a story?
Yeah, go ahead.
So in Colorado, I met this guy, really nice guy, Brett, unusual, and helped him come up with a couple concepts of scanning. He runs a small family fund, about 900 million, and out of Santa Monica. And I helped him out on last week, Monday, and Sean told me after the fact, he goes, "Oh yeah, that's the Lululemon guy's brother. He just manages his money." So he's using trade ideas to manage the Lululemon money.
That's awesome. And didn't he open the first California
Exactly.
store?
Yep, in Santa Monica. Before it took off.
Yeah, poor guy. He probably doesn't have any money anymore after all that.
What a life. He just manages family money.
Yeah, a small little family fund of almost $1 billion. Good times.
He's a good guy, but he loved the software, and I showed him a couple cool things, so that was interesting. Sorry.
Yeah, no worries. I love hearing stuff like that. So there we go. Square, look, ZS, same thing. Lulu, same thing. Oh, how about now? Can you hear me now? Okay, this one expended a little bit more energy, but then we got the little 45-minute consolidation, and then whammy, off to the races. So, these were all over the place, ladies and gentlemen, some happening during the SPY breakdown, some happening before, and some happening after. And that's the thing is that, the market's like a snake when it moves around. You got the head moving, guess what? Body's got to catch up. So a lot of the times, once we have these big breaks on the major indexes, there's plenty of time to find other patterns that have not yet come to fruition because they're down the body a little bit. They have to follow the motion of the head. And then, of course, going back to the SPY, exhibiting that pattern. Just good stuff all over the place. So I really like it in a couple of different senses here, the way things played out with the AI being predominantly long and posting a pretty damn good day. And then on my family of manual tickers, feeding me plenty of high quality shorts. Of course, everything's going to be mimicking the market to some extent. I'm noticing these bounces in some of these stocks aren't quite as high as the overall markets, which could play into what Steve was talking about earlier, right? How the battering ram might not have been pulled back quite far enough to push us up. So, based on what I'm seeing here, anything is possible for tomorrow's session. Now, as is the case in most market conditions of this nature, there are always a couple of things going up, right? Well, this little guy wasn't silent today. My Turbo Up family no resistance produced, let's see here, SNBR. Kind of got a chuckle out of this one. Sleep Number. Okay, well, look what we had going on with SNBR today, which was triggered by the Turbo Up family as well, as it broke out of this little congestion area right here. Only thing that kind of detracted from this trade today was this kind of wide range bar on the open, getting all the way up here. So it technically wasn't a true range break until we got above that wick today. But you can see right here what happened once it got there. A little sideways action, another lift. So a really strong, solid move up for Sleep Number today. And look what we got going on in the daily, ladies and gentlemen. That's a sweet little range break. I'd like to point out too, fractal nature of this pattern, because if we played this today and we're willing to accept that prior 15-minute bar right there as our risk, well, we made a good entry. We made a good play. And then we've got the same pattern playing out right here. Now, technically it broke out, prior Friday, poked above there a little bit, but a lot more defined here, a lot more volume. And of course, we can see nothing to write home about, but a good 60% above normal volume, which is what we like to see in these types of plays. So a dreamy little play from Sleep Number there. I guess the Sleep Number was set on 11 today for the stock. Now, ASND, this one was also triggered from Turbo Up family no resistance. Why do I have the asterisk by it? Because it was very interesting the way this one came through my thought process today. Number one, I saw it come through here, ASND. I extracted it so we could find the exact time. Now, I'm sitting there, I see ASND come through Turbo Up, no support. I pull it up, I'm like, choice, this is tight. I mean, my risk is right here, bottom of that prior 15-minute candle. I'm getting, the alert in this candle. I'm like, that's so good. But I'm looking, and of course I wasn't up on everything today, so I'm looking at this, I'm like, surely this has to be a buyout, right? So Steve, what do? I go to Twitter, I type in $ASND.
Yep.
First
Get the story.
hit on the ASND stream of information, my boy Dave Mabe.
Oh, look at
All
Dave.
right, this is my
The data whisperer.
the
Dave
data
May.
whisperer. By the way, ladies and gentlemen, Dave is one of our coders at Trade Ideas. He's been around since, I think since 2008, right? He's been with us since 2008.
Yeah. It's fun hanging out with him in Colorado too.
Great guy, great trader, great coder, great everything. Quality guy all the way around. You can pay me later, Dave. So what do I see? It's on his curated trading list of tradable cap stocks. That's all I needed to know, because I got my pattern. I know it's not a buyout. Matter of fact, it had just been upgraded not too long ago. Look at this relative volume that this thing finished at, 34, and it was jacked up when I first pulled it up. I'm like, this looks too good to be true, but I got to try it anyway. And we got a nice push here, ladies and gentlemen, 118.24 to the top of that candle, and peaked out 127, right? So, 10% would have been 12 points. So it wasn't a 10%er, but a nice pain-free trade with a lot of confidence behind it, not just based on the pattern and the very powerful metrics and the extremely low risk, But hey, I was able to fold in an auxiliary piece of data, which just made me go, I'm done. In it, good deal. Everything worked out. And it might be one to keep an eye on tomorrow, depending on how this thing opens and depending on what type of snuggly long signal it might pump out tomorrow. So in closing here, I would like to give honorable mention to iRobot because it did pop highs at the end of the day, never really lined up like I wanted it to, but this is one we've been talking about for quite some time. You know, it broke out of this little area of congestion not too long ago, and a couple, 2-3 days up, finishing with this little green hammer candle. So might be one to keep an eye on for tomorrow, and based on what it does on the intraday, if it provides you with a nice, tight, snuggly entry with low risk, might be worth taking a look at. But we'll see what transpires tomorrow. We have no idea what the market's going to bring, so all we can do is be very well prepared and react accordingly. So that's about all I got today, ladies and gentlemen. Looks like the questions panel is up to snuff. So, Steve, anything to tack on here before I let Scott walk us out?
No, other than Walid's correct. We marked up iRobot last week in my Tuesday webinar, and it's performing as hoped. Gave it a 5-star rating because of this intense short squeeze and the beautiful channel it was breaking out of that you've been talking about. So that was good. Question by Jesse.
The time frames.
Go ahead.
Well, it might just not be on the latest beta yet, but for example, you can see here I go to my time frames, and I've got not only the intradays and the daily, but I've got the weekly and the monthly. So Jesse, I would just say, yeah, go check you're probably on a lower version than what we have here. So 6.9, when we release it as beta, we'll have the weekly and monthly.
Yeah, if we don't have it yet, it's coming soon.
Yep. All right. Very good. Just want to thank everybody for taking time to pop in here. We know you guys are busy, and we appreciate you taking the time to hear what we have to say. So, Scott, if you're ready to tell everybody how they can save some do-re-mi on an upgrade or a new subscription, we're ready for you.
Right on. Okay, a couple items on the way out before we actually get to the discount code. There's a great ebook that Jamie and Steve contributed chapters to. We put it out last year. If you don't have it, you should get it. It's free. Trade-ideas.com/ebook is the URL to go to. Put in your email address, and you'll get the download link to 5 ways to win in a post-BTFD market. It's got 5 strategies for you to keep in your trader's toolbox that helps you out in a rocky market. It's good stuff. We've got a lot of good reviews for it, so get one if you don't have it yet. There's a podcast that comes out on Fridays, and we had a new episode up last Friday, so get the newest episode and previous episodes by searching for Trade Ideas Podcast in your favorite podcast app. Add us as a subscription and check out some of the guest spots on the earlier episodes. There's a discount code available this month, March on, all caps. That's good this month for 15% off your first month or year of Trade Ideas. And standard members, you can also use this to upgrade to premium and save that 15% off your next installment. Any questions, email us at info@trade-ideas.com. Follow Jamie at QuantBot on Twitter. Steve Gomez is at Today Trader. We also have at Trade Ideas. Facebook.com/TradeIdeasPro is the page on Facebook to like and share what we post with your friends. We'll have a recording of this up later on tonight or tomorrow, so keep tuned for your email update with the link to the playlist. Thanks, Jamie. Thank you, Steve. Have a good one.
See you tomorrow.
Thanks, everybody. See you tomorrow. Bye-bye.